Hello, everyone. Welcome to the market opening bell on Tuesday, November 4th, your 10-minute guide to the stock market. After a significant pullback in October, Hong Kong stocks started November on a positive note. The Hang Seng Index opened 92 points higher at 25,999, with gains expanding in the afternoon to a high of 310 points at 26,217, before closing at 26,158, up 251 points or nearly 1% for the day. Turnover shrank to 228.6 billion Hong Kong dollars. The H-share index closed at 9,258, up nearly 1%. The Hang Seng Tech Index fell as much as 0.9% at one point, but closed at 5,922, turning positive by 0.2%. Southbound funds net bought 5.472 billion Hong Kong dollars worth of Hong Kong stocks, including 1.029 billion Hong Kong dollars in Xiaomi, 993 million in CNOOC, 461 million in China Mobile, 372 million in Ecosol, 325 million in 3S Bio, and 296 million in Innovent Biologics. They net sold 1.381 billion in SMIC, 955 million in Alibaba, 628 million in Hua Hong Semiconductor, and 151 million in Tencent. According to statistics, Southbound funds have net bought Xiaomi for 4 consecutive days, totaling $1.912 billion. CNOOC for 3 consecutive days, totaling $1.603 billion. And net sold Tencent for 4 consecutive days, totaling $1.99 billion. Technically, the Hang Seng Index has reclaimed its 10-day moving average at 26,092 and 50-day moving average at 26,058, but lost the 20-day average at 26,163. These three moving averages are currently converging, so breaking above or below them is not particularly meaningful. The real signal will come from either breaking above 26,600 or below 25,600. Mainland A shares opened weak but recovered in the afternoon. The Shanghai Composite closed at 3,976, up 21 points or 0.6%. The Shenzhen Component closed at 13,404, up 25 points or 0.2%, and the Chinex, which fell over 2% earlier, closed at 3,196, up 9 points or 0.3%. Total turnover in Shanghai and Shenzhen reached 2.1117 trillion yuan. The renminbi midpoint rate against the US dollar rose 13 points to 7.0867. October's rating doc China manufacturing PMI fell from 51.2 in September to 50.6, slightly below the market expectation of 50.7, but still above the 50 boom-bust line for the third consecutive month, indicating only a mild improvement in manufacturing sentiment. On production and demand, both production and new orders indexes declined. Affected by external trade uncertainty, new export orders dropped sharply into contraction territory. Despite weak export orders, domestic demand and promotion activities supported overall new orders, maintaining weak expansion. At the same time, external uncertainty restrained production, though related sub-indexes fell month on month but stayed in expansion territory. Price indicators continue to diverge, with the pattern of rising raw material costs and falling finished product prices persisting. Manufacturers offer discounts to maintain sales, continuing to pressure profit margins. On the Hong Kong market, China's Ministry of Finance and State Taxation Administration jointly issued an announcement on gold-related tax policies, effective immediately, clarifying that Standard Gold traded on the Shanghai Gold Exchange and Shanghai Futures Exchange is exempt from VAT on the exchange itself. Upon physical delivery and withdrawal, different taxes will apply based on usage. The new policy runs from November 1st, 2025 to December 31st, 2027. Gold jewelry stocks came under pressure, with Chow Tai Fook plunging 8.7% to close at 13.9 Hong Kong dollars, the worst performing blue chip, and Lao Pu Gold falling 7.2% to $635.5. For sudden adjustment in mainland gold tax policy reduces the VAT deduction rate for jewelers' gold purchases from 13% to 6%, potentially raising procurement costs by 7%. In this case, the industry is likely to raise prices to pass on costs, which could benefit leading players in the competitive landscape. Chow Tai Fook Jewelry stated that starting November 3rd, it would adjust prices on some gold products with increases matching the cost rise from the new policy. Hong Kong gold stocks rose collectively on news of sharp temperature drops in northern regions. For example, morning temperatures in Mohe, Heilongjiang fell to minus 25 degrees Celsius on October 25th, setting a new low for late October. Parts of Hulun Bayer, Inner Mongolia dropped below minus 30 degrees Celsius, the coldest in a decade for the period, and snow depths in Heihe and Muhe, Heilongjiang exceeded 30 cm, with some stations nearing or breaking 50 cm new records. With a cold wave, cities like Zhangjiakou and Daqing started eating early, kicking off the seasonal peak for coal consumption. In the first half of 2025, coal supply was generally ample, demand support weak, and prices trended lower with oscillation. But as peak demand rises and supply-side policies tighten, the shifting supply-demand balance could push coal prices higher, benefiting coal stocks. Macau gaming stocks rose, then pulled back. October gross gaming revenue was about 24.1 billion petacas, up 16% year-on-year and 32% month-on-month, equivalent to daily average of 777 million petacas, above expectations due to sustained strength after Golden Week. From October 6 to 31st, daily average was 750 million petacas, down 35% from Golden Week core, but still above September's 610 million petacas, and the 35% drop better than historical 40%. However, November is expected to normalize with daily average around 673 million petacas, up 10% year-on-year, but down 13% month-on-month. Sasa issued a positive profit alert, expecting net profit for the 6 months to September of about 48.5 million to 50.5 million Hong Kong dollars, up 50% to 56% year-on-year, mainly benefiting from sustained growth in visitor numbers in core markets Hong Kong and Macau, improving local foot traffic. The group's marketing strategies and shopping perks attracted customers and boosted spending, successfully lifting transaction volumes and sales in Hong Kong and Macau, and in response to mainland China's retail evolution, closing physical stores to focus on online business strengthened profitability. US major indexes moved mixed. The Dow fell as much as 426 points to 47,135 before closing down 226 points at 47,336. S&P 500 up 0.2% to 6,851. Nasdaq rose as much as 1.1% to 23,976 before closing up 0.5% at 23,834. The Nasdaq Golden Dragon China Index tracking Chinese ADRs rose 21 points or 0.3% to 8,295. Several AI chip company deals boosted tech stocks. One, OpenAI signed a $38 billion cloud computing deal with Amazon AWS. Two, Microsoft signed a 5-year $9.7 billion GPU cloud service contract with Iron. Three, Microsoft reached a multi-billion-dollar deal with supercloud platform Lambda to lease AI infrastructure powered by tens of thousands of NVIDIA GPUs. Amazon rose as much as 5.9% to $258.6 before closing up 4% at $254. Microsoft up as much as 1.4% to $524.96, but closed down 0.2%. Iron up as much as 24.7% to $75.73 before closing up 11.5% at $67.75. Tesla saw sharp sales declines in Europe in October, down 89% in Sweden and 86% in Denmark year on year, about 50% in Norway and the Netherlands, and 31% in Spain, while industry-wide pure EV and plug-in hybrid sales rose 119%. US October ISM manufacturing PMI fell to 48.7 from 49.1 in September, below the expected 49.5, marking the eighth straight month of contraction. However, S&P Global's October manufacturing PMI rose from 52 in September to 52.5, slightly above the preliminary 52.2, showing expansion for the third consecutive month. Our stock pick today is AUX Electric, stock code 2580. AUX Electric is one of the world's top 5 air conditioner providers. Its business covers the design, R&D, production, sales, and related services of household and central air conditioners. Household air conditioners include wall-mounted units, cabinet-style and mobile units, and other categories. Central air conditioning systems include VRF systems, packaged units, heat pumps, chillers, and terminal devices. Its rich product line meets numerous application scenarios, such as residential homes, office buildings, shopping malls, hotels, hospitals, and industrial parks. The group's business footprint covers 150 countries and regions worldwide and is also the leading brand for household air conditioners in China's mass market. It benefits from factors such as the incremental demand driven by rural revitalization policies and urbanization processes in lower-tier markets, as well as increasing consumer focus on cost effectiveness. The group leverages its extensive sales network and cost-effective product advantages while employing a multi-brand strategy to meet the diversified consumption needs of different markets. To reflect its pioneering spirit, the group named itself with the transliteration of the English word for ox, namely AUX ox, and uses ox as its main brand to lay out domestic and overseas markets. It further enhances market penetration through a multi-brand portfolio, including Hudson and Allfit, with plans to launch premium brands in the future to reach a broader global consumer base. Facing industry competition, the group actively expands overseas business, launches multiple high-quality products tailored to local needs, and continues to advance its OBM strategy, achieving steady growth in operations. In the first half of 2025, total operating revenue reached 20 billion yuan, up 16.7% year-on-year. Among this, export revenue grew 28% to 10.839 billion yuan, while export OBM revenue surged 71%. Net profit attributable to shareholders reached 1.872 billion yuan, up 5.1%. In terms of overseas layout targeting ultra-high temperature and dusty usage scenarios in the Middle East, it launched T3 inverter wall-mounted units incorporating R32 inverter plus refrigerant cooling technologies, overcoming challenges in high temperature attenuation and inverter drive reliability. In the Saudi market, the R32 inverter model achieved sales exceeding 300,000 units in just half a year after launch, accounting for approximately 80% of total sales in Saudi Arabia. For the ASEAN market, focusing on user needs and special usage scenarios. It continuously upgrades products. For example, in Vietnam, to cope with sideways motorbike transportation and coastal salt humidity conditions, it introduced products equipped with sixth generation inverter control technology, heat exchanger, and electronic control anti-corrosion processes, ensuring product reliability and durability. The group has deployed localized sales teams in Vietnam, the UAE, and Saudi Arabia, and initiated localized operations. On the product side, it deeply integrates AI technology, cloud voice capabilities, and AIoT technology. Its independently developed AI intelligent control system deeply integrates AUX self-developed large model with DeepSeek technology, enabling multiple modes of interaction such as offline, online voice, mobile app. According to Sullivan statistics, the group ranked first in national sales of smart voice controlled air conditioners for 3 consecutive years from 2022 to 2024, recommended by price 15.5 Hong Kong dollars, initial target $16.7, then $17.4, stop loss $14.7. I do not hold the above stock.